What's going on, y'all? Today, I'm gonna be doing a market review of Tuesday, July 7th, 2026. And as always, I'm gonna start with the dollar index. And like I've been saying the past couple market reviews, I'm bullish on the dollar index because I'm looking for price to trade into this monthly high, monthly buy side, and this monthly stop run inversion for value gap, which is within this breaker. Sorry, within this breaker. You see, had these short-term relative equal highs, stop run, then we break lower. So the first uh, buy side imbalance in that run to stop run then becomes an inversion for value gap. You see, it was used right here to deliver lower. Then we drop into consolidation, and price starts seeing bullish momentum higher. So that is my monthly drawn liquidity, and I'm going to be bearish until we reach that, and I'll see what we do then. So, being bearish on the dollar, at the end of last week, we get a swing low formed after trading into this balanced price range. You see, we tap the high, and then we get a nice rejection, no body close within this fair value gap or BPR, leaving the weekly low. And yesterday, we kind of pushed into the SIBI right here that's created, and then we get a rejection. But like I said, my bias remains bullish, so I am looking for price to continue higher. And that's where we were today. Going down to the 4-hour chart, you see we have this nice bullish order block created. Trades into this daily for value gap. The body stop at the high. The wick does the damage into a consequent encroachment. Failed swing low, showing the strength again. And then we rally through the short-term high, which validates this as a bullish breaker or changing state of delivery. See, we return into it yesterday, did our work early in the AM session, and then we explode from there. And again, I'm looking for all these bullish or buy side draws, relative equal highs here, and this imbalance here as our next short-term objective above this short-term high. And with me being bullish on the dollar, I am looking for technically, lower prices in the NASDAQ, but prices kind of in all-time high territory. So I'm not trying to call the top, but short term, I am risk off. So I'm kind of leaning more towards any selling opportunities if they are presented. And then looking at the NASDAQ, like I said, risk off because the dollar is obviously reaching for a higher. Even though we have all-time highs, relative equal highs, I'm leaning more towards shorts. And you see today we get a run on this previous week low, which I was already looking for as a target because we had a significant SMT formed, a bearish SMT. You see ES trades into this weekly high from, what was it, last week, 2 weeks ago, whatever. ES trades into that, showing strength, but the NASDAQ is, you see, it didn't even get anywhere. Actually, it was right here. Yeah, it didn't get anywhere close to that. So that kind of shows you like the bearish underpinnings in the market and what you should be looking for. So you see, close below, last down close candle, validates this as a change in state of delivery. We also have balanced price range was created, SIBI. Once we trade through it, comes a balanced price range, we trade back below it, use it here, trading almost to the high, then we trade away, which is also within this change in state of delivery. You see, yesterday we wick into it with a small range day. That was kind of the key, something I had in the back of my mind to look for today, because the precursor to a long range day, a long expansion, is a small day, especially when it's inside the high to the low of the previous candle. You see small range trading into this bearish PD array where we find support or resistance. You already have this balanced price range that I don't want to see price trade back into. So the only way left to go is down, back into this last down close candle. And I don't know, I'll keep an eye out if we want to run out this short-term low, but Always looking for the low hanging fruit objective, which was this low and this low right here. So looking at the hourly chart here on the NASDAQ, you see we have all this resting liquidity, which was previous week's low on the daily chart. And notice how I'm using the bodies instead of the wicks, which are kind of elongated from where most of the liquidity is. When you have it like this, you want to focus on the bodies because price might not trade to the lowest low, and it will disrupt your targeting or your objective. You see price doesn't even trade down to the wick. So if you're targeting that today, then you probably got caught trying to chase a continuation short. That was never going to happen because all the resting liquidity was already ran below these bodies and below this low right here. So with that being said, you see we have this bearish order block. You see run up higher. Actually took out a short-term high right before this big run lower. Price returns to that order block. We get a little rejection. Then we run up again. Stop run into the order block. We respect mean threshold, which is the halfway point or equilibrium, basically, of the range from the lowest body open to the body close. See, we don't even trade up into it. Then we get a nice run lower, which validates this as a bearish breaker. Low, high, higher, high, low, higher, high, lower, low, creates this bearish breaker. And you see that is where we were overnight trading in London. Price was respecting this unicorn fair value gap, which is the fair value gap within the breaker. And you see also this fair value gap on the hourly chart is the only fair value gap, only real fair value gap within this whole run lower. Small one right there, probably, but this is the only real one right at the low of the breaker. You see London trades into it one time, leaving the high above midnight open. So that leaves the intermediate high of the day. So London trades up into that breaker, unicorn for value gap, the high, and we drop back below, showing that that is a strong high and we can anticipate a continuation lower. So down on a 5-minute chart, again, we have this hourly unicorn for value gap. You see London trades right to the high. Then we get strong rejection out of that, trading below the low and also below midnight open, which creates this change in state of delivery. And the intermediate high in London, you see you have a lower high to the left, a short-term high, intermediate high, and you anticipate any subsequent high to be a lower high as well, because London is creating the high of the day basically. So in the morning session, pre-market actually, we trade up into the change of state of delivery. Price does not run London high because we are anticipating a classic sell day because we're bearish, higher time frame, risk off, right? So we are not looking to go long anywhere in here, even though they're short-term relative equal highs. Price is quote unquote so close to London high, but we are not trading based off draws on liquidity. We are trading based off narrative and bias. So we trust this change in state of delivery to hold price back. You see it does here. A failed high, a failed higher high, and then price breaks down. And you see when pre-market trades into this change in state of delivery, it does not lay a body over the mean threshold, showing you that this is a valid propulsion block that you can see is used at 9:30 open. Price wicks through the mean threshold of this propulsion block, but no body. Again, the body is all the way down here below the opening price. So you can trust that this propulsion block will hold as we deliver lower, which it does. Still on 5-minute chart, you see we have this order block form, fail to reach into the propulsion block. We have this large wick, and then price breaks again lower. validating this order block. And once we close below, trade up into it, get a nice fair value gap, wick into it, and then just price melts into that sell side liquidity that we were looking at on the 1 hour chart, which is in the bodies, not the wick, which was not delivered today. Even when price retraced and came back down, it still didn't deliver it because all the liquidity was resting at the bodies. And as far as my entry, I entered this trade around this area. I should have waited longer until I got confirmation that we pushed off this 5-minute order block, which led to me making an impulsive decision in the charts and not being able to capitalize on this large move. But I'll show you that once we get into it. Real quick, I wanted to show you on the regular trading hours. You see toggle here, go to regular trading hours to see basically when price opens at 9:30 and when it closed at 4:14 the previous day. We had this large gap, almost 400 handles. Usually you'd anticipate price to trade into consequent encroachment, but because we're already anticipating lower prices, our narrative is for us to reach lower. Bias is bearish, and we have an objective, and we're looking for a classic sell day. Usually you'll see price trade into the lower quadrant, which it does here perfectly to the tick, and then breaks lower. See, we have an order block and also the 9:30 opening price. Price finds resistance at that level to the tick, and then we break lower from there. We wick into this change of state of delivery here, and we continue lower. This 5-minute order block is validated with this close. Wick into it, and then displacement lower. This is in the macro. So you see macro just reprices to an inefficiency, offering premium. And also this breaker right here. It's the high, low, higher high, and then break lower low. Trade right into the low of that. That's our breaker. You see the bodies respecting this sell side imbalance, buy side inefficiency, showing you the narrative that price is going to run lower. Get a nice rejection out of that. Fail to touch the low, and then we get our displacement with the breakaway gap. This price runs to deliver our sell side objective, and that is on the regular trading hours chart. So here we are on my Top Step Express account, same account I've been showing you guys, or I've showed you once, I think. But this is my execution on the day. See, I only took one trade. That is the one rule that I will follow no matter what, because if I break that rule, it's going to be executions all up and down this joint. So I just got to stop myself there. Even though I lost this trade, you see, I'll break it down right here. What I was looking for. I saw the stop run. Relative equal highs, we traded into ORG, opening range gap, lower quadrant, and rejected. In my mind, I'm thinking that move is going to happen instantly all the way down here. So I'm trying to get in as soon as possible. So I see trade up to the first presentation for value gap. We respect consequent encroachment and break lower. This order block, that was my entry. And my stop loss was at the high of this fair value gap. You see, we include the volume imbalance in the fair value gap. So I have my stop loss right there. You see what's crazy is it did not get hit. But as soon as I saw this big candle, I kind of scared myself or talked myself out of this trade because, first of all, my first entry was not where it should have been. It's not following my model, even though I feel like I know what price is going to do. And you see it did respect this fair value gap. But it is not my model, and I was not confident with it. So I shouldn't have taken the trade that early. And it cost me this large move. Like, I took a loss on a day where I could have made all this money, right? So that just shows you trading is not just being able to read the charts. It's also being able to handle yourself and follow your rules. And if I was to really enter this trade, it it would have been based off a 5-minute PD array. This order block is formed right here. Trades to the high, the first presentation for value gap, and then we close below it, which validates it as an order block. So that, at the very least, should have been my entry on the return. If not, this subsequent for value gap will return into the breaker. But you see, I got impatient, I had a little FOMO, and I entered earlier than I should have. This is something that I'm dealing with in my trading. Believe it or not, it happens a lot of the times. I think I know where price is going to go, so I try to get in there before the run happens, and I end up talking myself out of the trade or taking it too early. So yeah, that's my video. I hope you guys learned something. I'm gonna hit y'all on the next one, man. Leave a comment, you know what I'm saying? Like, all that. Let me know if it's anything y'all want me to go over more in depth. But yeah, I got y'all on the next video, man.